Hello, everyone. Welcome to our Silicon Heartland show. Today, we're going to be featuring Will Gray, who is a managing director and a co-founder of Atento Capital in Tulsa. Hello, Will. How are you today?
Hi, Rebecca. I'm great. Thank you so much for having me. How are you?
Good. Well, we have a lot of people who are signing on today from Tulsa and throughout the region because we've been doing our Silicon Heartland series, which relates to my new book, which is Silicon Heartland. And I'll tell you about the context behind Atento Capital and why we invited Will and what the format of the show is. So I want to encourage a lot of people to come in and ask questions. So you can ask questions through the chat function or the Q&A function. So chat is really good, and I will read out your question and we'll get it answered and Bill will answer it. So please keep the questions coming. I'll be watching the chat box all along. So I've been observing the Heartland trends for about 20 years or more and wrote a few books, and the latest one is Silicon Heartland. I like to be a trend spotter of frontier markets, so I wrote about China and India, and I wrote about other markets that are on the frontier, such as the Heartland today. Well, today we're going to be focusing on venture capital, and we have Atento Capital, which has just raised a $100 million fund. So we're going to be hearing about the new fund and how they're investing it. But I think one of the really interesting things is that it's plugged into Tulsa and minority and diverse entrepreneurship and diverse investment. It also is investing in other VC funds. So this is kind of a different animal, a different type of venture capital fund than we're normally used to seeing. And it's very regional. So another interesting thing about it is that so many of the startups that they've invested in are women-led. So a lot of good things there in Tulsa with Atento Capital, which was founded in 2020. Tough year, 2020, but already with a $100 million fund and a great LP behind it, George Kaiser. So who is Will Gray? Well, Will was born and raised in Tulsa, and he's been with Atento Capital since the start. He was in wealth management before that. He was an equity research analyst, and he is a pro tennis player. We can ask him all about tennis today, too. So he has his MBA and his BA from the University of Tulsa. I just want to walk you through a few slides to give you a little bit of context about where Atento Capital stands and where the Heartland stands. Well, the Heartland has been attracting a lot more venture capital, about 4 times more in the past decade, and it's attracted about 18,000 new startups. Where's this energy coming from? Well, a lot of new trends, universities, R&D, the whole remote working idea, the Silicon Valley exodus, this decentralization of Silicon Valley, the relocation incentives, which we know Tulsa has that with Tulsa Remote, and of course, things like the lower costs of living, but still a very vibrant lifestyle. Another driver of the Heartland is this diversity. So certainly Black Wall Street in Tulsa and the Black Venture Summit in Tulsa are big drivers of the ecosystem in Tulsa and the region. I like to put this slide up because it shows you the tech clusters that have emerged in the Heartland. They're very specialized by city. And for instance, Youngstown with 3D printing, Cincinnati with supply chain, Dayton with military applications, Indianapolis with Salesforce there, and a lot of SaaS startups. So I think there's a lot of energy around in Tulsa. So that's a high point of Tulsa. But it is interesting to see these tech clusters that have formed throughout the Heartland, and each one of them different. One of the issues still for the Heartland is the venture capital gap. Still, a large percentage of the money goes to the coast, and the coast would be Boston in New York and Silicon Valley. So about 75% of that money goes there, but it's changing and it's beginning to tilt toward the Heartland. As you can see here, that's me on the road tour for the book. So we are seeing changes. Atento Capital with its $100 million fund, High Alpha in Indianapolis, Drive Capital in Columbus. These are all, there's a number of other VC firms that have come up. So if you take a look at where the talent is, where this new tech talent is, you can see that Tulsa is up there with a 19% increase over the past 5 years. And that is not bad at all. It's better. These are the top Heartland markets. So as you can see, Tulsa is up in the top. And Nashville leads 36%. Madison, Wisconsin, also very big increase. Louisville, Dayton, Indianapolis, then Tulsa with 19% increase. So all of these places are emerging, but they're not all emerging population wise. What is happening is the tech talent is moving in, and that's where you see the increases. For instance, population trends, Columbus is a huge gainer with 15% increase in 10 years. But in terms of the tech talent, the percentage increase is not as much as a place like Tulsa. Tulsa, actually, looking at the Census Bureau figures, has actually lost a little bit of population over the last decade. So I was kind of surprised by that. Maybe we can ask Will about that. But where are we seeing the comeback issues for the Heartland? Lots of issues: the supply chain, reshoring, the VC gap, where the next Silicon Valley is, the gradual pace, the competition with China, and the continued challenges of moving from a flyover market to a fly-in market. There's still a lot of issues to be overcome, and infrastructure is one of them. Weak internet access in some places, and training of a new labor force that can work in the new manufacturing that is in the Heartland today. So all of these issues. And we're seeing a U.S. industrial policy today that is addressing a lot of these issues. A lot of new money going into infrastructure and training and venture capital as well. And one of the more interesting things is the $10 billion that is going into regional innovation hubs. So I'm going to stop there because this is a good segue to talk about Tulsa and what you're doing there in Tulsa. And I would love to hear you talk. Give us an overview of the Tulsa tech market. What is happening there, and why is Tulsa becoming a tech hub? Because it doesn't seem like the most natural city to be a tech hub, but it definitely is getting a reputation as a tech hub. So tell us about that.
Yeah, great. Thank you so much for the introduction, Rebecca. I think there's a kind of a variety of reasons why Tulsa seems to be an attractive place to start businesses today, and certainly there are specific catalysts for why Tulsa has kind of appeared on people's radars most recently, and I think definitely the George Kaiser Family Foundation, who is just doing incredible work throughout the tech ecosystem here, is really driving so much of that. But the city of Tulsa itself is as a born and raised Tulsan, and I say this with complete bias, but also with some objectivity. I just think it's a wonderful city. Most people who come to Tulsa for the first time are very surprised to see that Tulsa is quite a kind of a green and very lush place. In fact, it's called Greentown, Green Country rather, and I think that at one point Tulsa was the oil capital of the world, and it was meant to be a much bigger city than it ever became. I think that there's a lot of attractive parts of the city, just kind of aesthetically. I mean, the topography is wonderful, and I think that the social kind of the social fabric here is also is quite rich, and so I think people find it a wonderful place to live and to be. And now with kind of more resources being poured into the development of the tech ecosystem, it just makes a lot of sense for for tech workers to kind of migrate here and also for companies to start here.
Right. So you say Tulsa was the oil capital of the world, right? So that moved to Texas, right? Houston.
That's
So
right.
yeah, so I'm kind of interested. I'm curious about why did that happen? What happened there?
Yeah, so one of the earliest kind of oil plays was discovered kind of I think in the early 1900s, and maybe throughout, the better part of the century, Tulsa really was like the place to be if you wanted to go out and wildcat for oil and gas plays. And
Mhm.
over time, there were other parts of the country where oil and gas reservoirs were being discovered. There were new technologies like horizontal drilling that was discovered, and all of a sudden it unlocked exploration and production across the entire United States in different parts of the US. And so, Texas now, which has very rich minerals in kind of the West Texas, as well as East Texas, kind of became the home for a lot of E&P companies. So the exploration and production, what stayed in Tulsa, and there's still a good amount of E&P companies in Tulsa, but the large portion of those companies have migrated kind of south to Houston. But what stayed in Tulsa is the midstream industry. And so midstream being kind of the pipeline industry. About 30 minutes kind of northwest of Tulsa sits a place called Cushing, which is, I think, where something like 60%, and I might be watching these numbers, but a good portion, a very material portion of oil and gas supply in the United States is stored and flows through at any given time. And because of that infrastructure that was developed here, the major pipeline companies still have a major presence here in Tulsa today. So the energy industry is still very kind of still very vibrant here, but certainly we've lost some of that activity from the E&P space down to places like Houston and Denver and North Dakota and other oil plays.
Right. Yeah. One of the things that I noticed when I was visiting Tulsa in the fall was the Petroleum Club in downtown Tulsa. So we don't have a petroleum club in New York City. I don't think we have a petroleum club in Silicon Valley either, but that was interesting. So, gee, what does it take to be a member of the petroleum club? How rich do you have to be from oil? Probably pretty wealthy. Yeah. So anyhow, tell us about what innovations that you're seeing in Tulsa today. Is a large amount of it around energy and I don't know other fields that are very hot like healthcare?
Yeah, certainly we've partnered with some of our sister entities, as I like to call them, to kind of help identify kind of what industries can we add value to the most. And there are some industries that make more sense to be in places like Los Angeles or New York. And maybe one example is fashion. So if you're building a company that's really kind of servicing the fashion industry, it probably makes sense to be building in a place where there's kind of a fashion epicenter. But if you are looking to build an energy-focused business, an aerial mobility-focused business, a health tech company, I would argue, space and aerospace companies, there are a variety of sectors that I think that places like the city of Tulsa and the Heartland generally have a real right to add value to, given kind of the heritage of the Heartland and the manufacturing presence that was here.
Mm-hmm. You mentioned aircraft, right?
Yeah, so actually, despite the fact that Tulsa was the oil and gas capital of the world at one point, today I think, if not the largest employer by sector, I believe is aerospace. And so there's, American Airlines has their largest MRO facility here. I think it employs something like 5,000 people. There's Spirit Airlines that exist here, Nordam, which is a great aerospace company here. There's L3 Harris. There's just a lot of aerospace activity here. Of course, Tinker Air Force Base is pretty close by, which also has one of the largest MROs for military purposes. And then Fort Sill. And then just a few hours north, there's places like Wichita, which has like Textron and Cessna. And so there is real aerospace heritage in this part of the country, and Tulsa is certainly one of those cities that has that.
So do you think that Tulsa has gotten over this kind of idea of the flyover country? Is Tulsa the fly-in country now? or what do you think the image is?
No, I think for people who have visited Tulsa, and have taken the time to visit places like Tulsa, it's certainly kind of shaking off that name of kind of flyover country. I think when people get here, they're quite surprised at the activity here, what the amenities are in Tulsa, the culture, the food, the restaurants. There's real, there's nightlife. Tulsa is a city of 1 million people metro by population, and so I think it takes people by surprise. And I'm sure that there are some folks that have yet to kind of experience Tulsa or places like Tulsa that would still consider it flyover country, and but I would invite them here and see what the opinion is afterwards.
Okay. You're also in the center of a regional hub there with Bentonville, Arkansas, not too far away, and then Oklahoma City as well. So are you investing region-wide then, outside of Tulsa, and taking advantage of this kind of regional capability?
We definitely are, Rebecca. And actually, our strategy, which is largely place-based with respect to the deals that we lead at pre-seed and seed, we look to add value to companies through the lens of Tulsa, or value to funds through the lens of Tulsa. And it doesn't necessarily require the business to be in Tulsa. So we have a strategy that is kind of that is stage agnostic. And so companies that maybe have, raising a Series A or a Series B, who have, established themselves elsewhere, but could see value in hiring talent that, that can contribute meaningfully to their businesses, in a place like Tulsa are companies that we're interested in investing in. And so, I'm happy to kind of dive into the strategy, but to answer your question, we are, we do some work in Northwest Arkansas in partnership with the Walton Family Foundation, and helping kind of build out an angel network across the 412 corridor. 412 is the highway that connects Tulsa and Northwest Arkansas, and that's been a lot of fun. And certainly there are some complementary attributes of both regions, where in Northwest Arkansas you have kind of amazing presence of really large established companies that look different to the companies that exist in a place like Tulsa. And a place like Tulsa has amenities and population that we think can be quite complementary. And certainly Oklahoma City factors into that as well. I would say that Tulsa and Oklahoma City have very similar kind of industries, but we are investing kind of, we invest kind of across the country, but look to add value to companies and funds through the lens of Tulsa, and that's what we're best at. Yeah. Okay.
So let's talk a little bit about your strategy of investing in diverse founders, minorities and women, and then you have the Black Venture Summit that's there, and the Black Wall Street, the rebuilding of Black Wall Street. Can you talk about Tulsa's position and how this is advantageous for a firm like Atento Capital to be there and to capitalize on this kind of trend of diversity, right?
Sure, absolutely. I don't have the numbers in front of me right now, but I remember, I think maybe just a few months ago, about 55% of our portfolio was allocated to founders or fund managers, people of color or women. And certainly, our thesis is to be investing in the underinvested. We see alpha investing in underrepresented populations, whether that be underrepresented by race, gender, where someone lives. So geography certainly can get overlooked. We just think that there is a lot of innovation and potential to unlock across these different groups. And we think that by giving them access to our networks and connecting them to helpful resources across the country, that we can add a lot of value to those companies and drive a lot of alpha. So certainly Tulsa has I think unique reasons for why people would want to come and build here, who are identify as underrepresented, and I think that our thesis is just that there's a lot of alpha to unlock.
Okay, can you give some examples of some of those types of investments that you're making? Just what kind of companies they're in, what sectors, what their founders are like, and how they're progressing.
Yeah, absolutely. So Rebecca, we have kind of a generalist approach. I mean, I probably jumped the gun a little bit in describing some of the sectors that we're most focused on, and maybe I'll take a moment just to kind of talk a little bit about what sectors we're investing in. But we are generalist holistically. We're kind of focused on solving specific issues, helping reduce the cost of healthcare and increasing the quality of delivery. So health tech is certainly an area of interest. Helping solve the climate issue, so energy technologies, things that can make the world a more sustainable place. Those are problems that we deeply care about and we want to solve. But we are generalist investors, and so maybe a couple of examples. There are a couple of founders that lived in Kansas City, a husband and wife couple who moved to Tulsa, that we're building an education technology platform called Bottle Learning. And they were having, I think, somewhat of a difficult time raising because they're in Kansas City, and there are some wonderful managers in Kansas City, but there isn't kind of the density of venture capital that exists in a place like Kansas City. And this was really early on in our kind of journey as Atento Capital, Rebecca. There were some really interesting founders and entrepreneurs in Tulsa, but early on we felt the need to really kind of try to recruit people to Tulsa to build here with us. And so we looked at places like Kansas City, like St. Louis, North Carolina, elsewhere that maybe didn't have density of capital, but really wonderful ideas and really wonderful and talented founders who had real connections to the problems that they were solving. And we were able to bring them to Tulsa and work with them closely and kind of lead their first institutional rounds of financing, and then find downstream investors and kind of through our network. And now those companies are kind of off to the races and doing really well. And so very proud of the work that we're doing with those companies. And I think that given where they were from and also it's a Black woman married to an Asian man, and certainly there's statistics don't lie about how much money gets allocated to people of color, and given where they were in Kansas City, it was just unlikely that they were going to be able to raise capital, and which is a shame. And I think that we were incredibly fortunate to be able to find founders like that who are willing to take a chance on a place like Tulsa and a firm that was new. And I'm really excited to watch them grow from here. And so that's just one example of a company that
so they're staying in Tulsa?
They're in Tulsa. In fact, they're on the first floor of the building that I'm in right now. So we kind of share an office today. Yeah.
Oh, good. Good. So I'm sure you have, how about one more example of a up and coming Tulsa startup you think is going to make a lot of waves?
Yeah, so I think another really good example of an up and coming startup, there were a couple of young founders coming out of college that had, a passion for helping increase the adherence to medication. One of the founders, who was, I think he grew up as an orphan from Mexico, was adopted by his grandparents, was walking on the beach with his grandfather one day, and his grandfather sadly, tragically passed away from a heart attack because he had not taken his medication properly. And so this founder had developed a deep passion for solving the medical adherence problem. And so he found himself another co-founder who had also an interesting personal connection to that same problem. And they began building kind of a technology that helped patients adhere to medications through a Bluetooth technology that kind of attaches to a prescription bottle cap. These founders were coming from San Antonio, which is not, historically a well-funded city. And there was an underrepresented founder from a racial perspective. They also saw the value in kind of moving to Tulsa, working with us as lead investors. And we're incredibly humbled to watch those two founders kind of operate and build, and the company is kind of off into the races and doing quite well with the business. And I think that they're employing people in Tulsa. I think the company's like 45 people today. Not all of those folks are in Tulsa, but just to give you kind of a sense for how the company is progressing.
Yeah.
But that's another wonderful example.
Well, Tulsa's been successful with its Tulsa Remote program too, of encouraging entrepreneurs to move there and actually stay there, and reward them financially for making the move. So have you invested in some of these relocated entrepreneurs as well? And what percent, and if so, what percentage of your portfolio is that type?
Yeah, Rebecca, what a great question. Something I'm so excited about because, you know, 5 years ago, I wouldn't have said that Tulsa has like a rich talent pool in the, you know, kind of computer science landscape. And certainly there are other cities that are, you know, have more talent and density of that talent than we do. But I think what's interesting is that Tulsa and really the George Kaiser Family Foundation and now kind of the state of Oklahoma have gotten together to really kind of import and artificially create these talent pools, and people are coming to Tulsa from, you know, of coastal locations. And there's nothing against a place like New York or San Francisco, but I think people come to a point in their life where they realize they want something different. They discover a place like Tulsa because, I mean, candidly, that $10,000 price tag is really an effective marketing tool for someone who's maybe earning $150,000 or above on the coast. But it's just enough to get people on the margin who are considering moving to come check out a place like Tulsa. And they check it out because it's intriguing that there's this $10,000 kind of award to come move to Tulsa.
Yeah.
But people stay because of the community aspects of the program and of the city. And we are seeing interesting deals coming from that program, and we have some amazing attendants that we've hired out of that program. And so, in fact, one of my colleagues, Rosa Hathaway, who worked 10 years at SpaceX, came back to Tulsa through the Tulsa Remote Program. She and her husband both were working at SpaceX. She as a propulsion engineer, so a literal rocket scientist, and her husband on the software side, and they came back to Tulsa. And she was interested in finding something new, and we were able to hire her into Atento. And we are seeing founders pitch us from that program, and we're seeing our founders hire from you know that talent pool. And I think it's just a wonderful. It's just strengthening more, you know, why Tulsa is going to become, I think, a leader in the Silicon Heartland.
Right. So what about the tech talent training in Tulsa? What changes are going on with the universities in encouraging more entrepreneurship? Are you seeing new programs originating?
Oh gosh, I am, and I think there's a couple of groups that I would really, you know, love to highlight. One, Holberton Academy, I think is just a wonderful program offered, you know, for people specifically interested in moving to Tulsa. It's you know, to call it a boot camp is not the right word. It is a rigorous, I believe, 20-month program, something like 18 to 20-month program to teach people to become computer scientists. And that program doesn't require students to have had formal higher education, which is really important. And it's intentionally seeking out people, you know, from underrepresented backgrounds to come and learn and upskill in the tech space. And so, you know, what the George Kaiser Family Foundation, there's a couple of other foundations that are kind of helping, you know, kind of subsidize the experience for people that come through that program in Tulsa at Holberton Academy. You know, there's kind of a stipend that's being given to the students that go to that program, because, you know, I think the foundations understand that, you know, if you're making a living as a taxi cab driver and you really want to kind of upskill yourself and get yourself into a position, you know, there is an opportunity cost for taking 18 to 20 months off of your everyday job, because it is a full-time program. And to go, you know, become a computer coder, computer scientist. And so, you know, there's a wonderful kind of stipend program available for students that can kind of have, you know, have monthly living, have wages for kind of to live on a month-to-month basis, and to be able to go and take advantage of this opportunity. And so I can't speak high enough for Holberton, and we are also seeing a lot of that talent get hired into our portfolio, and I'm excited for that program to continue to expand, because they're doing a wonderful job. And then I think, you know, Tulsa Innovation Labs, you know, I could speak for the rest of this time on all of the things that Tulsa Innovation Labs is doing. They're making just a tremendous impact partnering with kind of the higher education institutions, as well as community colleges, to make sure that there are pathways into education that will lead to jobs of industries of the future.
Okay. Okay, good. So I'm looking at the questions here too, and one person wants to know the website for Atento. You want to just spell that out for Siva? The website address?
Oh, I'm sorry?
Do you want to, one person wants to know the website for your Atento Capital.
Yeah, that's right. So it's just atentocapital.com. That's ATENTO capital CAPITAL.com.
Yeah.
And funny story about Atento Capital, Rebecca, which I love sharing. Atento means helpful in Spanish. It also means attentive. My co-founder, Michael Bosch, who's really done kind of laid the groundwork for Atento Capital, alongside of the George Kaiser Family Foundation, is married to an Argentinian woman, and I think out of kind of a romantic gesture wanted to name the firm a Spanish name, and so that's where, for anyone who's interested, kind of a fun fact about Atento Capital.
Okay.
That's where the name came from.
Oh, that's good. Well, that was a good question then, which led to an interesting answer then. So Hal Kelman wants to know about these companies you talked about being off to the races. So what does that mean in terms of customers or revenues? What kind of growth are you talking about?
Yeah, and Rebecca, I mean, I want to be careful not to kind of give away too much kind of proprietary information, but for bottle learning, I think that let me put it this way: if anyone here is old enough to have played Oregon Trail, like myself, because I was born in the 80s, I think that bottle learning is kind of like the Oregon Trail of today. There are millions of people who are being exposed to this wonderful technology that's helping kids learn how to perform math more effectively. And so, the scale of people that they're reaching is in the millions, which is just wonderful. And so, they have really reached product market fit. And so I think that when I say off to the races, I really focus on how much are the users getting value from the platform. And I think that the audiences that they're reaching and the engagement that they have is really kind of speaking volumes for that company. And then similarly for the other company that I described, and we have many more in the portfolio that have very similar stories. But the other company that I described, they were at $0 in revenue, kind of a year ago, and I can say that they are, they've crossed kind of the 7-figure amount and are kind of going up and to the right from there. Kind of adding on a couple of new clinics every single week. The team is growing. I think it's 45-ish people today, and I think they have pretty grand plans by the end of the year. And so, I think that one's also to give you a sense for how well those companies are doing. But again, Rebecca, these companies are still really early on, and these are startup companies, and obviously anything can happen. But we see a lot of promising signs across those companies and really across the portfolio.
Right, and you're investing at a pre-seed stage too, so that's super early. So pre-seed would be like 0 revenues. Often
it's 0 revenue. Sometimes it's 0 product. It's the founder, with an idea, maybe who's been able to kind of find a co-founder, and they have kind of a pitch deck, and they're out kind of raising capital on an idea. So we've done deals where we've come in pre-product. We've come into deals where they've had product, but maybe they haven't really figured out product market fit. We're stage agnostic, Rebecca, so we do kind of span the gamut. We see kind of from pre-seed as late as Series D, and certainly in the underwriting is different across those. But definitely, we have invested in companies that are pre-product.
What's the main factor that motivates Atento Capital to make the investment? What is the main factor? You're looking at all these companies. You have to be very selective. So what's your main criteria?
Yeah, it's a great question, Rebecca. And I'd say it skews, it changes across the stages that we invest. But one thing that's very consistent, but probably more pronounced in the early stages, is really the people. We're at the earliest stages of a company. You're really underwriting the people, the founders, how passionate are they to solve the problems that they're setting out to solve? Are they the right people to do what they achieve, what they're setting out to do? And is the problem in the market, a real problem that needs to be solved? And is and so that's kind of where we start. Is the market big enough? Is this a real problem? And are these the people to do it? And are these people, gonna kind of do whatever it takes, run through walls to make sure it happens? And candidly, it also comes down to kind of our own personal working relationships with the people. I mean, when you're investing in a startup, you have to optimistically assume that you're going to work with these founders for up to 10 years. And when you want to build a 10-year relationship, you want to build it with people that you like and you want to work with.
Sure. So a question about the thesis of the fund and the areas of focus. I think we covered that in part, but just to reiterate, could you just name the 3 top areas that you're investing in?
Absolutely. And so I think, it's really, we think about where we want to invest as like, what problems do we want to help solve? And, certainly, as I mentioned before, there's a real issue with, the healthcare system in the United States. And so we do have a focus on health tech as a result, trying to invest in technologies that are lowering the cost of healthcare delivery and increasing the quality of that delivery. We are very passionate. I think if you ask Mike, like, what is keeping him up at night, and me as well, and I think a lot of people on the team, the climate issue, and so energy technologies and technologies that can build a more sustainable future are certainly areas that we're very passionate about. And energy technology and climate technology is quite broad, but those are problems that we're interested in solving. And then I think that there are other really interesting spaces that we can just add a lot of value to. I think in companies that require kind of their supply chains to be in the US, whether for kind of national defense reason, national security reasons, those companies, those supply chains that are finding their way back to the US, we think that those companies aren't going to choose places like California or the East Coast, where maybe real estate prices are just too high. The regulatory framework in a state like California is just too burdensome. Cost of human capital is too high. And candidly, a place like Tulsa, which has really low cost of energy, really low cost of land, our workforce is the right workforce. We've had history of building things. And so we think that we are well suited to add value to companies that are interested in physically building things. And so I think you see that a lot more in our late stage strategy. We'll invest in companies that maybe aren't founded in Tulsa, but maybe some technology's been born out of a lab in Palo Alto and Stanford. And so maybe the company is technically headquartered in a place like Silicon Valley, but is trying to figure out where they are going to, kind of scale volume manufacturing. And so we think that we can add a lot of value to companies like that. And that's across a variety of industries, but
right.
Those are just to give you a sense for what we're thinking about.
Yeah, very good answer, I think. And that does get to this other question about what excites you most about Tulsa. Why should founders take notice? And I think you just gave a really good answer. But is there anything that you would like to add about why founders should take notice of Tulsa? Like if they're comparing Tulsa with Omaha, for instance, or Dallas or Austin, Texas.
One thing I'll say about Tulsa, Rebecca, which is why I think it's such a wonderful place, and full disclosure, I am like an absolute diehard Tulsan. I'm born and raised here, so I love the city. And so, but I really do think that Tulsa is just a wonderful place. It's a population of 1 million people. It's big enough to matter, but it's still small enough and intimate enough to build wonderful community and relationships. And I think that if you have a great idea, you can connect with people to kind of help promote that idea and get things done. And so I've been thinking about, I've been kind of forming a little bit of a thesis around, why are people so friendly in Tulsa or places like Tulsa? And I wonder if it's nothing against places like New York, where you find wonderful people in places like New York or San Francisco. But I wonder if, in a place like that where there are millions of people, if the anonymity is that the word? Kind of the anonymous nature of a city like that, where, I use the example of, like, if you're in an airport and you're surrounded by people, but maybe you don't know anyone. And so I think that it's hard to be a jerk in a place like Tulsa, is what I would say, Rebecca. Is kind of the point that I'm driving, is that it's too small of a place. And so I just see a lot of collaboration across the city. And that's really regardless of political views. And I acknowledge that I think Tulsa is a very purple city. We certainly sit in a red state. And, I think regardless of political views, Tulsans generally are all trying to work together to, kind of promote Tulsa and get Tulsa kind of moving up into the right. And, and I think about, like, how people behave in social media, where there is kind of an anonymous nature. You get a lot of aggression, but and so I draw kind of comparisons to places like, kind of the social meta world, like Facebook and New York, where there's just an anonymous feeling where you can be kind of, snarky, but you can't really do that in a place like Tulsa, because you might know their next door neighbor. And so I don't know why people are so friendly here, but I feel like that's kind of the general characteristic.
Okay, good point. Community is very important, and being a part of it. So one person wants to know, how do they pitch their company idea to Atento? How do they get in to see you?
Absolutely. So we have two teams. We have a pre-seed team that, as the name suggests, focuses on companies that are kind of raising their first rounds of institutional capital. And then we have a core fund team that looks at companies that are raising seed rounds as late as kind of Series D. So as well as fund managers. And so connecting with myself, Adele Beasley, Mike Bosch, or any of the associates on our team is definitely the way to go. We have an event every month called First Friday, where we invite the entire community to come be in our office. We provide free food, free drinks. There is an hour long kind of AskAVC anything, Rebecca, where we open it up to the community. It's entirely free to come. Anyone can join, and we try to make ourselves as available as possible, because we recognize that venture capital hasn't been so accessible in other places. And so for people in the community, we have a physical location that we invite them to every single month, and actually our office kind of serves as somewhat of a co-working space. If you are a friend of Atento, which just means, like, you know where to go. We have people in the office all the time that just kind of work in and out of the office, and we welcome that. We love the fact that the community feels welcome in our office, and I think we're quite approachable to pitch. And you can find us online. I think that our website is building up functionality to be able to kind of submit pitches, but definitely reach out on LinkedIn. Our emails are fairly easy to find. Mine is will@atentocapital.com. You can probably look across the entire website and figure out what everyone else's email is based on that. And so we love hearing from people. Please pitch us your ideas.
All right, good. A question here about how the Atento Capital investment team ensures that they are attracting or connecting with founders that are from communities that are underinvested in. So, good question.
A wonderful question. It's not to say that we have any particular metric at the end of, when we look at our portfolio construction, we're not trying to think about, like, what percentage of underrepresented people do we want to be investing in. But if you are filling the top of funnel with deals that are consistent with our thesis of let's be connecting with underrepresented founders, and again, that means race, gender, location, then the bottom of the funnel is going to look very similar to the top of the funnel. I think that, if you look across our firm, we have a very diverse team. We have a very big team, thanks in large part to the George Kaiser Family Foundation for the support that they offer. But we have a very diverse team. And I think our diverse team has networks that are also that are kind of reflective of their own backgrounds. And so we get a lot of great deals from our team internally, and we have a wonderful sourcing kind of mechanism. We also, Rebecca, we invest in other venture funds.
Right.
And like I mentioned before, many of our venture funds, the GPs, are diverse themselves. And so, we look to kind of source deals from our venture managers, whether that be deals that we intend to lead early on, pre-seed and seed, or deals that we just want to co-invest in kind of later stage. And so, again, I think it's kind of intentionality around the team we've built. I think it's intentionality around the managers that we're investing in, who we look to source deals from. And so I think we've just built a lot of wonderful connectivity across a variety of great communities, and that's kind of reflected in the portfolio.
Who do you co-invest with the most? Any particular firm?
That's a good question. We've done a lot of work with AskAVC, who's kind of across San Francisco, LA, and Chicago. We've done some work with Foreign Ventures, Healthy Ventures, Avid Ventures. We have about 20 plus relationships, Rebecca. I would say that Hanaco out of Tel Aviv, we've done a lot of deals with. I think we've co-invested with the majority of our managers, but that's just a big part of our strategy. Really,
what percentage of these deals does Atento Capital lead?
So of the deals that we're co-investing with managers, we're never leading. So we will lead at pre-seed and seed. We're not generally leading Series A and beyond. We might at some point in the future. Today, our model is to invest in other managers who we feel very confident and comfortable getting into deals with. And then, as we kind of watch companies progress in their portfolios, and we think that we can add value to those companies through the lens of Tulsa, then we'll look to kind of start up a conversation with the companies. And as they are thinking about their next round, or maybe a convertible note, or just kind of a bridge financing, like we're happy to kind of engage at that point, but we're seldom leading at later stage, Rebecca. But I would argue that doesn't necessarily mean we're not like acting as a super active investor, because there were a few occasions where we were a very small check in a very large round, but we've been very active in trying to help those companies find physical locations and navigate kind of the regulatory environment in Tulsa, in Oklahoma, and find incentives that make sense. We'll partner with the Chamber of Commerce and introduce them to companies we're talking to. And so I think we add a lot of value as maybe a lead would, but we're not kind of writing that lead check late stage.
Okay. So the new fund that you've raised, you have one limited partner, right? And that's the George Kaiser Family Foundation. So could you talk a little bit about how this George Kaiser Family Foundation connection is an advantage? And would you be looking to bring on other LPs in the future?
Yeah, a wonderful question, Rebecca. And certainly the core fund and the pre-seed fund do have a single LP, and that is the George Kaiser Family Foundation. We are raising a little bit of additional capital through a sidecar vehicle from kind of local high net worth individuals and entrepreneurs that we think can really add a lot of value to our strategy. And so there are going to be other investors that get that will have exposure to the deals in the core fund. But the advantage of being partnered with the George Kaiser Family Foundation are just so vast. And I really point to all of the other, I call them sister entities, that the foundation has invested in, that we have such good relationships with, who are also kind of driving Tulsa's right to win in certain areas that really just drive so much value back to us. And so Tulsa Remote is certainly one of those sister entities that GKFF has really catalyzed and started, and that's driving. I think they have something like 2,400 people that they've moved to Tulsa in the last 3 years, and that's very significant. And I think they have ambition to continue to grow that pretty significantly. And so, we just see that as an opportunity for future deal flow and future talent that our founders can hire from. And so that's a wonderful advantage to be kind of, near that entity. And then Tulsa Innovation Labs, who is, focused on creating pathways of innovation for, some specific sectors, health tech, energy tech, cybersecurity, and aerial mobility. And the things that they're building is just creating more density of innovation in the city. And I think that, like, for the work that they are doing, which is also funded by the George Kaiser Family Foundation, is only going to benefit Atento Capital. We're only going to have a greater right to win and add value to companies that are operating in those spaces. There's just more and more innovation density. And so, then there's Build in Tulsa, which is the platform for Black wealth creation, and the accelerator programs that live underneath that platform, and the founders that they are bringing into town and that we have access to. It's just the density of the network that the George Kaiser Family Foundation is really building is just a tremendous advantage for us. And I think I'm forgetting, the last one, and there's several more, but one that I think is really important to call out in Tulsa, which is, I think around a 20-person, they have a 20-person recruiting function that is recruiting on behalf of companies in Tulsa. And so we get to take advantage of that offering. And so in Tulsa recruits on our behalf, and they recruit for free. And so that's a wonderful advantage that we get to take advantage of and kind of offer to our portfolio.
Sure. Okay. So what do you see as the challenges for Tulsa going forward in the future? Is it going to continue on this upward trajectory that it is on now? What are the challenges? What are the obstacles in the way?
Yeah, that's a wonderful question, Rebecca. And, I think that, it's hard to predict what's going to happen across the macro environment. I would say that, I would probably wager a bet that Tulsa will continue to outperform on a relative basis. And I hope that's on a relative basis that's still positive, kind of depending on how the macro turns out. I think Tulsa is going to continue to chug along. I think, even if the macro kind of falls apart, the middle parts of the country, and Tulsa specifically, are still going to see a lot of kind of economic activity. And so I'm excited by that.
Were you impacted much by the Silicon Valley Bank collapse?
Oh, we certainly had exposure to SVB. We had companies that, we were in very close connection for a few days with some founders that had exposure to SVB. So, thankful to have kind of avoided catastrophe there. But I think we're no different to a lot of other venture managers. I think that across our portfolio of deals that we led, I think maybe about a fourth of our companies, maybe a little less, had exposure to SVB. And so, we were impacted. Thankfully, there was kind of a resolution there. But you were asking, Rebecca, about, like, why do I think, or what areas will we struggle with? I don't think we'll struggle here, but I think any ecosystem that wants to continue to thrive, it's all about the people. In the same way that we think about underwriting our companies, it's all about the people that will kind of eventually find themselves here. And I think Tulsa has a lot to offer. And I think so. I think that we'll overcome that challenge of attracting talent, because I think Tulsa just has so much going for it.
Okay, there are a couple of specific questions here, and one is, you work with Scale VC, and if so, in what capacity? I know we were talking about the VC funds that you work with, but are you working with Scale?
I don't believe we work with them directly. Out of Columbia, Missouri. Actually, I've met with someone from Scale, and I think that maybe so they were in an equipment share. We are invested in a kind of an AI-driven e-commerce studio out of Northwest Arkansas, where the founder of that business was an early investor in equipment share. I think he might have introduced us to someone from Scale. We don't work closely with Scale at the moment, but we do invite a lot of collaboration across managers that are operating in the Midwest. We love that other managers are focused on this. We think it's just we're not trying to kind of guard allocation, maybe as you might find in other parts the venture ecosystem. We want to invite value-added investors into the deals that we're doing, and we love collaborating with people that share our thesis.
Okay. And there's a question here from a person who's trying to raise some money. He's already raised $2.3 million from friends, family, and angel investors. He's running a sexual wellness company, but he says that kind of company is scaring away VCs given limited exits so far. What do you think about this deal?
It's probably a little hard to opine on the deal without giving it kind of a closer look, but I definitely have observed founders who kind of struggle raising funds for companies that maybe society would label as kind of taboo, and that's unfortunate. I think that companies like that are exactly kind of the companies that maybe exactly the kind of the companies that a firm like ours would want to take a look at. So please make sure that you share information, because it's those types of deals that maybe get overlooked for some kind of strange reason, that we see a lot of opportunity in.
Okay, that's good. And they know how to reach you too, so that's also good. So a couple of more questions. What's your favorite part of working at Atento Capital? One thing only. This has to be a planted question. I'm sure of it. Somebody from Atento Capital is asking this. But anyhow, I answer it. Please tell us, what's your best part? You get to play tennis at lunchtime or something like that? I don't know.
Oh gosh, I'm not a tennis player anymore, Rebecca. I'm an aspiring disc golf amateur.
I
That's
see.
kind of my new sport. My favorite thing about Atento, again, it goes down to the people. We have a wonderful team. We have a wonderful culture. Every morning I'm greeted by really excited people who share the same mission and vision, and it's not just at Atento, it's across the entire ecosystem. Rebecca, I get to collaborate with a lot of wonderful, very, very smart and passionate individuals, and it's a real pleasure.
Oh, that is good. All right, that's wonderful. I think we answered a lot of questions today, and they were some really good ones in there too. So we do appreciate that. And, I want to share a few more slides from my show and tell here, but I just want to let you know that I've been on the road tour for the book, and it's continuing on. Here's part of the road tour. And all in my Honda Element, which is going out again. Great. But I've been all over Columbus. All these things are in the book. But yes, we've had the Silicon Heartland series online, and you can see all of the groups that we've had on the show. And these are all online, by the way, on our channel on YouTube. So actually, you can check everything out through our website, silicondragonventures.com. And that'll lead you to our newsletters and our videos and this AskAVC show, so you can stay up to date. And then also, I am about to embark on the second part of my road tour for the book. The first part was really the Rust Belt, and the second part is around the Great Lakes. So I'll be going to Buffalo, Chicago, Milwaukee, and also Madison, Wisconsin, a little bit west of Milwaukee. But this is going to be very interesting. I think Great Lakes were hit hard, very, very hard by the meltdown of the Rust Belt, and now coming back at the Tech Belt. Tulsa has its own story to tell, and it's a very unique story. So I encourage you to get in touch with Will at Atento Capital and go to Tulsa as well, like I did. You can certainly find out more about what we do by joining our Circle membership network, where we have a lot of VIP events and online shows and connections and exclusive content. You can find out all about that at silicondragonventures.com. And yeah, thanks a lot for listening. Appreciate it. And thanks to Will for joining us today. Will, thank you so much.
Rebecca, it was my pleasure. Thank you so much for having me.
Okay, well, we'll see you next time, maybe in Tulsa.
Please.
All right, take care. Bye-bye.